Talk a little bit more about the inflation piece of that, also the economy. For that, we bring in Jason Furman, the former chairman of the Council of Economic Advisors and a professor at Harvard's Kennedy School of Government. Also, Nada Eissa, who is former Deputy Assistant Treasury Secretary under George W. Bush and an associate professor at Georgetown. And Nada, I'm going to start with you on this. Let's just ask very quickly about inflation. What do you think? Inflation being the number one issue, does that come as a surprise to you?
Not at all. It's something that most of us have been struggling with for the last year. And even though it's kind of started to slow down, we're still feeling the pinch. So my concern about inflation is the drivers and the fact that they're changing over time. The question is now, how long do we have to live with inflation?
The drivers meaning you're worried about it getting into wages, and that makes it a
exactly.
stickier problem?
Exactly. So early on, I think that it was a supply disruptions, but the indicators say those have, for the most part, been moderated. So the concern now is we're shifting to inflation being more driven by psychology, in part because of easy money that we've had for the last several years, as well as massive federal spending, both of which made sense, you could argue, at the time. But nothing is free, and now we have to start to pay the price.
Jason, this has been a big concern of yours. You come from a Democratic administration, but you've been warning about this, kind of preaching about this for quite a while, that this inflationary picture is a difficult one, that the Fed's going to have to do a lot more than some people are anticipating. We were just talking about the difficulties that Jay Powell may face at this point, the more political pressure that comes. Why don't you map out how you see this playing out at this point?
Yeah, look, I mean, inflation is something that everyone thinks affects them. Even when inflation gets up to 4%, it can be a political issue, and it's been twice that. Congress is increasingly putting pressure on the Fed. I just don't think the Fed cares. I think the Fed knows what it needs to do. I think the Fed is going to do it. I think the last press conference was clear that the terminal rate was going to go even higher. I wouldn't be surprised if it goes into the mid-fives. I think there's a 20% chance we have a terminal rate above 6%, because I think there's a lot of persistence in this inflation. And you have a Fed chair who's no longer hoping for the best and planning for the best. He really is planning for the worst at this stage.
Hey, Jason, though, if you're right, how important are these elections, meaning the results? Given that it sounds like you're suggesting that Jay Powell is the one who really is driving this car.
Yeah, look, I mean, he's the main macroeconomic policymaker in our country. It will be interesting to see, assuming there's divided government, which seems like a very safe bet, what that means fiscally. Does it mean Republicans come in and do big spending cuts and it's fiscally contractionary? That would help the Fed out. I may or may not like the spending cuts, but it would help the Fed. Or do you get some sort of deal where Democrats get some sort of tax cut in exchange for Republicans getting business tax cuts? That's basically what you saw during the Trump years. Divided government was deficit increasing. A little bit early to tell which of those two scenarios will play out fiscally, but that will matter for the Fed for how high interest rates have to go.
Nada, can you just jump in a little bit on this idea of the Fed doing something until it breaks something? It's been a conversation that we've been watching, kind of been keeping an eye on. Andrew asked a very smart question. If something does break, do the two sides come together and try and hold things together, or is it past the point where the two sides could work, especially given what we've been watching since 2008?
Well, it depends what you mean by break, and also what breaks. I think the market is concerned that the rate at which interest rates are going up is going to eventually break the market. But the problem is we don't really have a choice. I think we have to deal with this issue. The Fed has to, and has to do it quickly. There's really not much of a choice, in the sense that there's no trade-off between a lot of pain in a short period of time or spreading it out over a longer period of time. I think the experience of the 1980s showed us that if the Fed at any point kind of blinks, we're going to pay a higher price down the road. In terms of politically what that means, I hesitate to make any predictions. The last time we had a crisis, we didn't see much movement in terms of the two sides coming together until the very end. So the question is, will they be proactive at this point and do something early on?
Yeah, Jason, normally Wall Street would cheer the idea of gridlock, but you do have situations where the debt ceiling exists, other things where they kind of have to come together. You get the sense that the two sides will at least work on avoiding some of those catastrophic potential issues?
Look, I worry a lot about the tail risk if something unexpected comes along and we need Congress to get us out of it. I was working for then Senator Obama's presidential campaign in 2008. President Bush proposed TARP. And what did he do in the heat of a presidential election? Obama supported it. He supported it full out. If we're in a similar situation, could I picture candidate Trump fully supporting President Biden's financial plan? That's a lot harder to picture than where we were 14 years ago. And if you have candidate Trump sort of saying from the sidelines, don't raise the debt limit, don't do what's needed for this, I worry a lot about what that means. Now, probably that won't matter, but it's a bigger risk than we were facing before, given the polarization in our politics today.